Thank you for joining us. This is Business Incorporated coming to you live from Lagos studios here in Nigeria. I'm Chimezie Obi Iwagwo. Coming up on the show, Nigeria's PMI reading for April 2018 expands to 56.9 reading. Mauritius business confidence improves in the first quarter of 2018. Plus, Glencore takes former partner Dan Gutler to a London court over unpaid royalties at a key Congolese copper mine. Let's get the show started now with the markets. And here on the African continent, the markets in Nigeria and South Africa have resumed trading activities after the Labor Day holiday. The Nigerian All Share Index is up 0.03% at midday, while the Jersey Index also 0.32% higher at intraday. Egypt was down 0.36% at intraday. Kenya closed 0.17% down on Monday. And in the Middle East, the stock markets were down in early trade rather in the intraday, with Abu Dhabi and Dubai leading the declines. The Abu Dhabi index was down 0.82% as telecommunications group Ooredoo fell 3.5% and Vodafone Qatar dropped 2.9%. The Dubai index was 0.92% lower, dragged down by property stocks. Emma Malls fell 5.4% and top developers Emma Properties and Damac Properties were down 1.2% and 1.9% each. Saudi Arabia's index was down 0.3% as RRG continued its declines from the previous day's trading, despite having posted its 9th consecutive quarter of earnings growth on Tuesday. The Saudi index has eased on profit-taking after it hit a more than 2-year high last week. And in Europe, markets were higher in early trading as investors kept their focus on earnings and monitored an upcoming Federal Reserve meeting. Let's talk to Ulrich Bartz now, who is standing by at the Frankfurt Stock Exchange for more details. Hello, Ulrich. Good afternoon. Thank you very much for joining us.
Hi, my pleasure. Good afternoon.
Now, the Eurozone economy has lost steam in the first quarter. Growth has gone down from 0.7 in the previous quarter to 0.4% for first quarter of 2018. How is that going down in the European markets and, of course, with the euro?
Yeah, the growth slowed down in the first quarter here, and the reasoning is that it was the strong euro. It was up to $1.25 in the first quarter. Excuse me. There's a little bit of pollen, I think, in the air, even here in the stock market, because all the trees outside are emitting pollen and the flowers. I'm a little bit sensitive to that. Sorry, it's that time of year here in Germany. And then also a factor slowing quarter one growth was the fact that there were a number of strikes that slowed down production, and also a wave of illnesses that kept workers from contributing their share to economic growth. Now, the market took that in stride. If you see the DAX behind me, you do see just a slight dip sort of in the middle of that picture. And that's where the economic news came in, and the market quickly recovered from that. And you basically see the same picture across Europe if you take the Euro Stoxx 50. Now, the gains there are not quite as pronounced as here, but basically the same effect from the economic news. I think one reason for that is that trade risks that are also mentioned as a reason for Q1 growth being less than optimal, a lot less than in the last quarter of 2017. Were worries over trade and protectionism, especially emanating from the United States, from the White House, U.S. President Donald Trump. But I think people are seeing a little bit more room for optimism now. Plus the euro, that major factor in the first 3 months of the year, well, that's at a totally different spot now than it was then. Then it was $1.25, as I said. Now it's just barely hugging $1.20.
Now the Fed ends its meeting today, and much anticipated labor market figures expected shortly. How much potential for disruption do you see there?
I think there's potential for disruption there, especially for the labor market data. It's called the ADP report. It's a report on the private job sector in the United States. And there could be some disappointment there looming. On Friday, we're going to have the big job report, which always has an effect on market prices and the currency markets, Forex. And the jobless claims, which come out every week, last week, disappointed. It was not that great a reading, and so that could cause some disruption. I don't think there'll be a lot of surprise from the Fed when it makes its statement after the end of the meeting later on in the day. It'll come in the evening European time after trading has closed here. And people don't expect a rate increase, but they will look very closely at the statement to gain any insight on when the next rate increase will be, and perhaps even glean how many there will be in the year, what kind of financing conditions you're going to be seeing in the markets.
Okay, still staying there in the U.S., Apple has done something for the shareholders, $100 billion share buyback. The shares shut up after the news. Are people still excited now about that?
Yeah, the Apple is an amazing story. People are shaking their heads, and the share is going up as we speak. It was up around 7 to 8% during the day, and this share buyback to the tune of $100 billion, that's something that, of course, increases the value of the share, and is in keeping with promises that Apple made to its shareholders. And it can now buy back shares with money that it repatriates from offshore, from markets abroad, where profits were parked basically in order to protect them from being taxed too highly in the United States if the money was brought back there. But with Donald Trump's tax reform, the bill for taking that money back and giving it away to shareholders is a lot less, so Apple's doing that. The dividend is going up, and it's also got good news from the iPhone sales, which are humming, and also from services and its cloud business. So people are quite optimistic about Apple at the moment.
All right, thank you very much for your time, Orich. Let's just keep our ears open to what Fed would have to say later today, and perhaps we'll talk about that tomorrow. Enjoy the rest of the day.